What's up, campers? It's your boy Scoop. You are live with Heavycampfxgroup. Alright, guys, so on this video, we're going to be talking about trading plans. What is a trading plan basically? So just to simplify, guys, a trading plan is a plan basically. Like, it doesn't matter what industry you are in, everyone needs to have a plan as to how they're going to tackle whatever it is that they want to tackle, right, guys? For an example, let's say you're a soccer player. As a soccer player, you know that, for an example, you cannot go out drinking and partying a day before a match, right, guys? Because this is going to cause fatigue. You're going to be tired. You might not be able to concentrate and all of that. Right, guys, so as traders, we also have trading plans. So these are just the rules that we set outside the charts and also on the charts that we basically follow. All right, guys, so I'm basically just going to break it down as much as I can, just to give you guys a direction as to how to set up your trading plan. Because I think one thing most traders struggle with, not even most traders, all new traders struggle with, is how to create a trading plan. Because when you're new to trading, I think it's impossible to set a trading plan, because when you set a trading plan, it's based on your understanding of the markets, firstly, your understanding of yourself, your account size, what type of trader do you want to be? Do you want to scalp? Do you want to hold positions for months? So you can only get to that conclusion once you've been in the markets for some time and you understand all of those things, right, guys? So that's what I'm saying. I'm just going to try and break it down so you know at least where to start if you are a new trader and you are looking to set a trading plan. Guys, so just to, as I said, trading plan is basically a set of rules that you follow. All right, guys, I have my own trading plan. Even if I give you my trading plan, guys, it won't work for you, because remember, a trading plan is based on who you are. You understand? If you are, maybe for an example, an anxious person, you can't scalp maybe lower time frames like your 1 minute, where markets are volatile and stuff. So, and maybe I'm okay with that. Emotionally, I can handle that, and you emotionally, you can't, or vice versa. So that is why another person's trading plan will not necessarily work for you. All right, guys. Also, maybe let's say I'm risking a huge amount, whereas you're not comfortable risking that amount. So that also contributes towards your trading plan. Alright, guys, so just diving into it, guys, there's a set of questions that you can basically answer to try and tackle the how to basically structure your trading plan, right, guys? And then if you are in my Heavy Camp Bootcamp course, if you're in the private group, then all this information is included in the PDF step by step, where you can actually, where the questions are there, it's 10 questions. I just summarized it just to give you a head start as to where you can start, right, guys? All of this is in the PDF, structured so that you know exactly what to do, right, guys? So one of the things that you need to figure out, one of the most important things that you need to figure out, guys, is what type of trader are you going to be. Do you want to scalp? Do you want to day trade? Do you want to swing trade? Do you want to be a positional trader? What this means is that when you're scalping, guys, it means that basically you are trading your lower time frames, like your 15 minutes, 5 minutes, 1 minute, and then you don't necessarily hold trades for long. So you basically go in, and then maybe 5 minutes later you are out, 10 minutes later you are out. Maybe you might let runners run, but as a scalper, most of the time you don't hold trades for long, right, guys? And then a day trader is someone who would, for an example, maybe wake up in the morning around London Open, and then around London Open, maybe they would look for trades and then enter positions, and then you find that they will hold their trade, or they will hold the trade up until it gets to their take profit, or they will hold up until New York Open or later in the evening, where they personally going to close their trade. Okay. So this is something that you need to understand, that do you want to be a scalper? Do you want to be a positional trader? And this is also based on, are you a student? Are you working? Are you self-employed? How much time do you actually have to spend on the charts? All right, guys? Because for an example, scalping might seem like a quick in and out thing, but what happens is, as a scalper, I sit on the charts for like 3 or 4 hours looking for one opportunity sometimes. Right, guys? So you might think that maybe scalping, because you go in and out, is something that would be quick. But then that's why I'm saying it depends on what you're doing. Let's say maybe you are a student, for an example, or you're someone who's working. So you spend most of your time at work, and then you are only home, in the evenings, in the morning. So you can, in a day, maybe you can dedicate 1 hour to 2 hours to trading. Okay. So this means that you can maybe be a positional trader, where in the morning or even at work, if you are allowed to be on your PC or on your phone, you can enter trades and then monitor them throughout the day, knowing very well that you don't actually have to be on the charts. You just monitor them. When you get home, either your profits are hit, stop losses hit, or you personally close your trades based on what's happening. Right, guys? And then the second thing that I would say is important: what session do you want to trade? Right, guys? So we have different sessions in Forex. We have the Asian session, and then we have the London session, and then we have the New York session. So it's basically 4 sessions, but then the Asian the Asian and the Tokyo sessions are combined. All right, guys. So that's why we're counting them as 3. So it's Asian, London, and New York Open. Right, guys? So you basically have to know which session do you want to trade, because we don't recommend trading all sessions. This is how you overtrade. All right, guys? There's enough volume in each session for you to catch enough perps to make profits. All right, guys? So you firstly have to figure out which trader you're going to trade. For an example, I stay in South Africa, right, guys? London Open is around 9 a.m. in the morning. So that's the session I trade most of the time, to be honest with you guys. So that's the session I'm looking at most of the time. That's the session I have time for. And then New York session, I trade it based on what I'm doing around that time, because I'm not only a trader, I also have other businesses. So you'll find maybe around 2 o'clock, I don't have time to be sitting on the PC. So I'm either monitoring my trades from earlier, or I'm actually not in trades anymore. But if I have time, then I will look at charts around New York Open. So those are the only 2 sessions that I look at, but I mainly look at the London session, guys. And then with the London sessions, the pairs that I look at, it's GBP pairs. You can look at your Euro pairs. So like basically currencies that are, that evolve around that London time frame. Right, guys? So just to give you a few pairs that move around that time, you can look at Euro USD, Aussie Dollar USD, but Aussie Dollar also moves from Asian session going into London session. All right, guys? And then around New York session, most of the time it lacks volume. And then you can also look at Euro JPY, look at GBP USD Chef. All right, guys? And then for New York Open, guys, the pairs that you can look at, again, Euro USD, Euro GBP, NZD USD. This is the pair I like looking at around New York Open. USD Chef, also this one. And then there's USD CAD. So there's a couple of pairs, guys. You can actually research them on the internet just by looking at that session, right, guys? So you don't want to look at a pair that's not moving at that session, right, guys? So just make sure that if you are trading a pair that starts with where the base pair is GBP, just make sure that it's around London Open, because that's when most of the time you get news events. So that's when you can actually look at the news events at London Open for that specific pair. So everything sort of corresponds. Right, guys? So even if you're not looking at the news events, for an example, but based on your setup, you can even take trades, and then when the news drop, most of the time, based on your setup, based on how you analyze the market, you'll find that the news actually pump volume in your direction. All right, guys? And then other rules that you need to have, guys, is maybe your lot size. For an example, what lot size are you willing to risk? For an example, when I'm taking trades, guys, for 1-to-1, when we mean 1-to-1, it's when you are risking $1 to make $1. right, guys? So you basically go into the market, your stop loss is at $1, your take profit is at $1. All right, guys, if you are new to trading, this is what you should definitely do. This is where you should start, guys, by building your account. Don't focus on making money, just start by building your account. All right, guys, so start by going for your 1:1 position. All right, guys, but then as time goes on, you can extend it and then go from 1:2. But then what you also need to understand is that not every trade you take will be your stop loss will allow you to use maybe $1, depending on the lot size you're using in your account size, right? It won't allow you to use the same amount every time, right, guys? Because remember, we put our stop loss based on our structures, right, guys? So if the market is in an uptrend, and for example we want to take this trade, so I'm assuming you guys have watched most of my videos and you understand how the market moves, right? So let's say we want to take this trade and we're aiming for a new high. So for an example, so our stop loss would be anywhere under here. Let's say we open the trade up here, and then so our stop loss would be anywhere under here, as we can see based on this. So our stop loss would be around 18 pips, right, guys? But as a scalp trader, I don't like risking more than 30 pips. I don't like risking more than 30 pips per trade, right, guys? So meaning if I go for my 1:1, it would be something like this, 1:2, risking 30 pips to make 60 pips. All right, guys, so this is also an important factor that you need to figure out as a trader, to say, okay, if I can, as a new trader, if I'm going to fund my account with $500, firstly, how much am I going to risk per day, percentage wise? Understand, guys? If your account is funded with $100, you cannot risk $20 per day. That's way too much. It means in 5 days it's possible that your account will be blown. So what that means is that if you fund your account with $100, you want to risk around 2-3% of that account per day, right, guys? So you want to risk in terms of dollars, right, guys? Let's say you have a $100 account, so you want to risk $3 of that account per day. So if, for an example, you enter a trade like this where your stop loss is 30 pips, that's already $3. So meaning that if you lose this trade today, that's the only trade you're going to take, right, guys? Tomorrow you're going to do the same thing. So this should be your plan. And the advantage of this is that, let's say it's Monday, right, guys? You take a trade like this, where you're aiming for 1:2, right, guys? So you're risking 30 pips to make 60 pips, right, guys? And let's say it's Monday, you lose your first trade, so you're down 30 pips, right, guys? And then Tuesday you take another trade, and then you lose that trade again, so you are now down 60 pips, right, guys? And then Wednesday you take a trade, and then you win that trade. So what that means is, with that single trade, you are now back on break even. So with that single trade, you've already recovered Monday's loss and Tuesday's loss, right, guys? And then Thursday, which is now the 4th day, right, you take another trade, you win the trade, or maybe you break even, for an example. You don't win the trade, you don't lose the trade, right, guys? And then Friday you take another trade, and then you win that trade. So what that means is that even though you lost 2 trades and you won 2 trades and you broke even on 1 trade, you are still up by 2%. All right, guys, so that's how you should actually look at your risk management in terms of trading. All right, guys, don't risk unnecessary amounts chasing huge amounts also, because what happens is, the more you take these trades, guys, what's going to happen is, the more you take these trades, the more you win these trades, you're going to build your account. You're going to move your account from $100 to $200 to $500 to $1,000. And with that experience, what's going to happen is, taking trades like this is it's going to become second nature to you. All right, guys, so now you will know that when I see a setup like this, I can actually risk a bit more, so you can up your lot size to actually make more than what you were making. All right, guys, so after 6 months, a year of trading, don't rush the process, but after a certain amount of time of trading, you can actually move from making $1 a day or $2 a trade to actually making $100 a trade. But as I said, this will come with enough experience. Alright, guys, so risk management is very, very important whenever you are planning your your trading plan, right, guys? And then along with trading sessions that you trade, guys, what's also important, like trading sessions and risk management, what also counts in that area, guys, is also how many pairs are you trading. As a new trader, I see most people want to trade about 4, 5, 6, 7 pairs, and that's not good because you don't understand the structure of the market. So what we recommend at Heavy Camp is that you look at 1 pair or even 2 pairs. Alright, guys, so these are the only pairs that you are going to look at. It doesn't matter what you see on Instagram, it doesn't matter who's making money on which pair. So you just choose 2 pairs. Alright, guys, maybe 1 pair that moves around London Open, another pair that moves around New York Open. And then what you do is for 6 months you look at these pairs. So this is where you're gonna back test on. This is where you're gonna set your key levels. This is where you're gonna take your demo account trades for the whole of 6 months, and then just get acclimated to that specific pair. Understand? Just understand how that pair moves. Understand if you are looking at GBP pairs, for an example, around London Open, how do they move? How much volume is pumped into that specific pair on a specific day? Maybe if there's no news or if there are news. Right, so if you do this for 6 months or a couple of months, you will start noticing these things, right, guys? And then the most important things is obviously to record this data, whether you do it on trading platforms. There are many trading platforms where you can actually record your progress, or you can write down your progress, right, guys? I'm old school. I like writing things down. The more I write down things, the more it sticks in my brain, right, guys? So the more I write down my results, or I even write down the trades that I take to this day, right, guys? So if I'm taking a trade, for an example, a positional trade, I would write it down, and then even make an alert on my phone so that it reminds me maybe after 3 weeks to check that specific pair. Because if you are taking a positional trade, for an example, you don't want to check that pair every day. All right, guys. One other thing, I would say maybe is important as a new trader that you can just start focusing on, guys, is don't focus on scaling down. You know, I know when you look at most people, when they look at Instagram accounts, you'll find people talking about perfect entries, sniper entries, and all of that. All of that is good and well, but the problem is when you are learning to trade, guys, those are things that you cannot focus on, right, guys? The first thing that you need to understand is the structure of the market and how to enter. Just enter, just be able to enter the market and your trades being right before you can focus on better entries, right, guys? So what you can do is just stick to 1 time frame, guys, or maybe 2 time frames. For an example, maybe just choose 2 hours as your main time frame that you want to look at, right, guys? So you're going to choose your 2 hours, and then whenever you scale down, maybe you scale down to your 1 hour. So you basically place your key levels. You just do this. So you basically quickly just do this. Go back to the 2 hours, right, guys? So you basically come, and then I'm just going to do it roughly, right, guys? Assuming again that you've watched my videos on how to plot key levels, right, guys? So let's say you plot your levels on the 2 hour, and then direction of the market, right, guys? And then we can see resistance, triple top. We have a triple top pattern before price fell, right, guys? So once you've gathered this information, you can see uptrend, triple top signifies a change in trend. It doesn't mean the trend is going to change, but it signifies, right, guys? So as traders, we look for stuff like this as confluence, right, guys? So you know that, okay, triple top, and then the market actually impulsed down, but now it's actually at a key level, right, guys? So looking at where price is, you can then scale down to 60 minutes, and then just wait for, if you are looking to sell, just wait for your retest, right, guys? And then once you get that retest, then you have 1 hour candlestick that closes in our intended direction, which is bearish in this situation, right, guys? Once you get a candlestick like that, that's when you can now start selling on the very same time frame. All right, guys? So once you've done this over and over and over and over and over again, once you are familiar with doing this, then you can start scaling down to 30 minutes, to 15 minutes. Alright guys, and then start looking for better entries. Okay guys, but this comes with knowledge, this comes with understanding how to read market structure, this comes with knowing how to read your candlesticks, candlesticks plus your key levels. Alright guys, because remember, candlesticks in the middle of nowhere, they're actually not that important. But then whenever we're looking at a candlestick, where we want to look at a candlestick is at a key level, right guys? So let me just go back to 1 hour. Alright guys, yeah, so if price moves back into our key levels, so what we want to do is just look at the what are candlesticks telling us, what are they saying, what are they printing, are we seeing rejections, is price pushing back into our key level, above our key level, what are the candlesticks saying? Alright guys, so once you have knowledge of all this information, this will become easier. But the only way you can understand this and do this, not perfectly, but then to a point where you are actually profitable and consistent, you have to practice, guys. I can do this for you every day, I can show you my charts every day, I can do video uploads every day, but then how you actually win in Forex is actually making these things second nature. All right guys, actually getting acquainted with the patterns, because everyone has favorite patterns that they like, and the reason for that, guys, it's because what comes easily to your eyes. All right, I can tell you about a triple top all day, but then you'll find that for you there's another pattern that whenever you're looking at the market, it just comes easily to you. You just see it immediately. Okay, so that is why you practice, that is why you backtest, that is why you always have to stay on the charts, that is why you have to take trades with your demo account, that is why you have to put your stop losses, that is why you have to put your take profits, to see actually what happens after you enter a trade. If the market comes back for a retest, pushes down, if you enter the trade, what's going to happen? Is it going to go down to your take profit? If the market turns and goes back up, is it going to hit your stop loss? So it's good to do these things on a demo account, so that whenever you can learn from these experiences, right guys? Because remember what happens, the market can retest, go down, right guys? And then this can be a pattern that you actually look for. What happens is, once you trade this pattern a couple of times, 4, 5, 6 times, you actually see how profitable it is. Meaning that if you trade it once, 2, twice, 3 times, maybe 10 times, and then you find that out of the 10 times that you've actually taken this similar trade, you've won maybe 6 times, or you've won 5 times, maybe 2 or 3 other times were break even. So you can then tell that, okay, this is a high probability setup for me. So whenever I see a setup like this, these are the setups that I capitalize on. This is where I make most of my money. But for you to get to that point, guys, you have to backtest, you have to sit on the charts. As I said, you can ask me all the questions that you like, and I can answer everything for you. I can even show you charts, I can do video analysis, we can do live trades. But then if you are not doing it yourself, it's gonna take you forever to actually get used to it, guys. But then if you are doing it, you are noticing the mistakes, the excitement of winning trades, that's gonna stick with you, the disappointment of losing a trade, and then when you go back and look, what happened, why did I lose the trade, and then you can actually see sometimes to say, oh, okay, I didn't enter at a key level, so I wasn't supposed to do that, so moving forward I'm not supposed to do that, or I was stopped out, but then your analysis, everything was on point, the price just happened to stop you out. So that doesn't mean that was a bad trade. The market just moves how it wants to move, and this is something you will also understand as you are backtesting. Alright, guys. And then the most important thing with all of this, guys, is I would say this is the magic trick. This is the, people talk of robots, the robots that never lose and whatnot. For me, this is the deal breaker, right, guys? Patience. Most people don't have patience. So when I'm talking about patience, guys, let's say, for an example, if you are in my private course, or if you're in my free group, you'll know that I emphasize and I talk a lot about trading from a key level, right, guys? So meaning that whenever price is not at a key level, it simply means that whatever chart you are looking at that current time is not good at all. There's nothing you can do, right, guys? So let's say, for an example, okay, we can see that looking at USD chef 4 hour, for example, we can see that price just broke this key level. All right, guys. So this is important to us because price is at a key level. We're waiting for a retest, and then we're looking to take positions at that key level. All right, guys. But then in a situation where price maybe falls, let's say, for an example, let me just remove this. Yeah, let's say price comes back for a retest, and then price falls, you miss that retest, and then by the time you are on the charts, price is around here at 0.91055. All right, guys. So we would consider this as heavy camp, we would consider this as a push phase. All right, guys, market is pushing. So if you are not able to enter here, that means that you cannot enter here, guys. Market is still in a push phase. So you don't know if the market is going to continue pushing, or if it might, pull back, or maybe even go back for a retest, as price can do that. It's allowed to do that. It does do that sometimes, right, guys? So that is why we say you will never enter here. We only enter at key levels. So what would happen is, if you come and the market is here, you would simply wait for exactly what I said. You would wait for the market to either pull back, and then once you notice that price has set a support, and there's now momentum shift back to the downside, and then that's when you can enter in and around these areas. All right, guys, stop loss above the broken key level with your take profits at our low. All right, guys, or simply wait for price to go back for another retest, and then look to enter again. All right, guys. But then if it happens that if it happens that the market just continues pushing, guys, if it happens that the market continues pushing after the first retest, then it simply means that that's a missed opportunity for you, right, guys? Remember, it's okay to miss trade. It's impossible to be in every trade at all times, right, guys? So if you miss the trade, you miss the trade. Just wait for another opportunity. Just wait for price to get to another key level. Just spot your key levels, your support, and then just wait for price to get to that support, and then just look what happens. Is price respecting that support? Is price breaking that support? Once price breaks that support in this instance, then you can start looking for more sells with the anticipation that price is going to create a new low. All right, guys. Yeah. So just to recap, guys, I know I said a lot of things, but then just to recap, guys, trading plan is basically just a set of rules that you follow, guys. What is it that you want to do when you are on the markets or off the markets, right, guys? Some of the things that I do is I've included working out, meaning that I only trade from a certain time to a certain time, guys. So I wake up, I work out, and then I know after my workouts, that's when I come sit on the charts for this certain amount of time. So what I do is I sit for pre-London. This would be, in my country, this is South Africa, right, guys? This would be around 8 a.m. in the morning. So that's an hour before London open. So around pre-London, I'm sitting on the charts, I'm analyzing, I'm looking for opportunities. Sometimes I even enter before London open based on the setups that I'm looking at, right, guys? And then around London open, still look at my pairs, the charts, monitor whatever trades I'm in at the time, or still looking for opportunities. And then around 10, 11 a.m., I usually go off the charts. But then sometimes even around 9 a.m., depending on the situation. Did I find a setup? Did I find a trade? Am I in a trade, or am I still looking for a trade? All right, guys. Sometimes I don't even find a trade. Then you'll find that if I don't find a trade out till 10, 11 a.m., then I leave the charts. All right, guys. You don't force the situation. Maybe if there's time later on in the day around New York Open, then I come back and then I start looking for other opportunities. All right, guys. So what most people do is they will fluctuate from pairs. Like they will, if they're not finding an opportunity on USD Chef, they will go to another pair. No opportunity to go to another pair. If you know what you're doing, guys, there's nothing wrong with that. Right, guys? That can be part of your plan. So no one's plan can be wrong. But then if you are new to trading, we do not recommend doing that because it will confuse you, right, guys? Stay with one pair. If the market is in a push phase, just do this. If the market is in a push phase, it's also learning. What you want to also learn is, okay, since market is in a push phase, how long will it take for it to get here? Understand? Just monitor those things, guys, because if market is in a push phase and then you abandon this pair and then you go look at another pair, maybe come back to this pair after a week or something. Yes, you can go over and look at what happened, but it's easier and it's more, in my opinion, it's more memorable when you are actually looking at it live. Right, guys? What happens? Sometimes you find that it's in a push phase and it only takes one candlestick, maybe 4-hour candlestick to hit your support. Sometimes you'll find that it will take a couple of days, maybe exhaust for some time before coming down or push back up. So these are things that you want to see. These are things that you want to look at, because in most cases, this is where you will actually find your opportunities, right, guys? This is how we can then take reversal trades and all of that, but that comes with that experience. All right, guys. So yeah, that's it for developing a trading plan, guys. So a trading plan can range from a lot of things, guys. It doesn't have to be specific. It doesn't have to be the same as another person. It's basically based on who you are as a person. What are you doing? Are you working? Are you a student? How much time can you dedicate to the charts? Based on that, what type of trader do you want to be? If you are working, if you are someone who gets an income, if you are a student, how much money can you risk on the charts? How much are you, once you've passed that demo stage, right, guys, how much are you willing to lose? If you fund, for an example, $1,000, which is around 15,000 rands in my country, right, guys, are you okay with losing that money? Right? If let's say, for an example, you fund with that money and it happens that you lose that money in a single day, are you okay with losing that money? So these are things that you have to consider, guys. So if you are not okay with losing such an amount, do not fund such an amount, right, guys? There are multiple brokers. You can start from $10. $10 is too small though, but this is also based on how much you can afford, right, guys? So there are brokers that you can start from $10 going upwards, right, guys? But an amount that I would recommend, the lowest can be around $50, but then this is if you are still forward testing, right, guys? You're not really funding $50 to go all out. You are funding that $50 to take your time and maybe take small risks to build that account, to also get used to the market, get used to trading with real money. All right, guys. Also, as I was saying, the time that you can dedicate to the charts, the number of pairs that you are looking at. So all of these, guys, they contribute to a trading plan. All right, guys. What type of person you are? Are you a greedy person? Are you someone who can open a trade and then while your trade is, let's say, for an example, you sold USD Chef, right, guys? And then let's say your take profit is, let's say you were supposed to get $100 from this whole trade, right, guys? And then let's say you open the chart and then you find that price is still around $40. Are you someone who's okay with leaving those profits and letting price continue to your $100 target? Or are you someone who, whenever you see that $50, you're just gonna want to secure? Right, guys? I'm saying this because I have students like this, right, guys? I have people who, when they take a trade and then they open the trade and then they are in profits, they just get anxious. They want to take that profit. They have this fear that, oh no, my money is going to go back to the market, so I just want to secure. And then there are people who are okay with, I was aiming for 100 pips, so I'm going to wait for 100 pips. So if price is at 70 pips, they don't take profit, depending on how many positions they open, right, guys? But then they don't take that profit. They don't even care if the market pulls back, whatever. Maybe what they might do is just secure to make sure that if the market pulls back, it doesn't go to their stop loss, right, guys? But then you'll find that they don't panic based on how much profits they're looking at. They will actually sit and wait for their take profit for the price to actually get to their take profit. Alright, guys. I've said a lot of things, guys. I hope I didn't confuse any of you guys, but then just to simplify, guys, trading plan is simply a set of rules, and then remember, these rules can change over time. So if you have a trading plan, if you write down a trading plan today, it doesn't necessarily mean that it's going to be like that till forever, right, guys? Because remember, the more you get used to the market, the more you notice other things, the more there are things that you like and dislike about maybe what you're doing in the market. That's the more you can actually get your trading plan more accurately. All right, guys. So that's it for this video, guys. If you are in the private group, guys, there is a PDF on this where I explained it in details, and then I've also jotted down my personal trading plan, even though it doesn't include everything. It's just basics, just to show you guys where you can start if you don't have a clue as to where you can start in terms of planning your trading plan. Alright, guys. So if you have a strategy and you don't have a trading plan, then you are doomed. If you have a trading plan and you don't have a strategy, then you are doomed, right, guys? These things go hand in hand. Alright, guys. Strategy is the way that you look at the market, the way that you enter the market, and then trading plan is the rules that you follow when you have to execute some of the trades that you are looking at. Alright, guys. It's your boy Scoop, Heavy Camp. We out.